Most traders believe the first trade of the day is the most dangerous one, but in reality, the trade that destroys most accounts is the second trade, not because the setup is worse, but because the trader is no longer neutral. After the first trade, something changes in your mind, whether you realize it or not, and that change is often what leads to the next mistake. Hello traders, welcome back to Nova channel, and let's continue another new topic today. When traders approach the market for the first time in a session, they are usually careful. They analyze the chart, identify key levels, and wait for confirmation. Their mind is relatively calm because nothing has happened yet. There is no profit to protect and no loss to recover. The first trade is usually taken with the clearest thinking, but the moment that trade closes, whether it ends in profit or loss, the psychological landscape shifts. If the first trade was a loss, the pressure to recover begins immediately. Even if the trader tries to stay disciplined, a subtle urgency appears. The second trade often carries a hidden objective, getting the money back. This is where revenge trading quietly begins. Instead of waiting for the best setup, traders start looking for the next opportunity too quickly. The patience that existed for the first trade suddenly disappears. Entries become faster, decisions become emotional, and the quality of the setup becomes less important than desire to recover. But the second trade can be just dangerous after a winning trade. A profitable first trade often creates confidence, sometimes too much of it. Traders begin to feel aligned with the market, then feel like they understand the price action. The next setup seems obvious, and position size may even increase slightly. This overconfidence can distort judgment. Instead of analyzing the markets from a neutral perspective, traders begin to assume the market will continue behaving the same way it did during the previous trade. But markets change constantly. The structure that produced the first trade may no longer exist. Liquidity may have already been taken. Momentum may be fading. What worked 10 minutes ago may not work now. Yet the traders still act as if the conditions are the same. This is why the second trade often becomes more dangerous one. It's rarely taken with the same objectivity as the first. Instead, it is influenced by emotional residue of what just happened. Professional scalpers understand this pattern very well. Many of them treat the moment after the trade as a reset point. Many of them treat the moment after the trade as a reset point. They step away from the chart briefly, clear the mindset, and approaches the market again as if they had never traded before. Because every trade must stand on its own logic, the market doesn't care whether your previous trade won or lost. It does not adjust its behavior based on your last result. Its environment is driven by liquidity, positioning, and new information entering the market. When traders carry emotion momentum from one trade to the next, they stop reacting to the market and start reacting to their own feelings. And that is where mistakes begin. So next time you finish the trade, whether it's win or loss, pause before looking for the next opportunity. Because the most dangerous trade is rarely is the first one. It's the one you take while your mind is still thinking about the last one. And that is the topic today. Thank you so much for your watching, and don't forget to like and subscribe Nova channel to receive more useful video for your trading journey. Happy trading and see you in the next video.